Hey, the real estate market, just like everything else, has been crazy, changing day by day. I'm trying to keep up with all the updates. There's been a lot of updates this week regarding forbearances and what happens at the end of the forbearance period, as well as some interesting market updates, especially for the Metro Atlanta area. So if you're interested in hearing about that, stick around and find out the details. Hi, this is Matthew sharing my experience with you once again from the Real Estate for Atlanta team at Maximum One Realty in Cobb County, Georgia. There have been a lot of updates this week regarding the market, what forbearances, so let's get right into it. A couple of weeks back, I did a video about the forbearances that were being allowed based on the CARES Act. And one of the big downfalls I was warning everyone about, which was true at the time when I published that video, was that at the end of the forbearance period, you would have to make up those payments. And I was very concerned that there'd be a lot of people that wouldn't know that, would ask for a forbearance, and then let's say they get 6 months. Well, 6 months from now, they would owe 7 times their monthly mortgage payment. And if they can't pay that, I was worried those people were gonna end up in foreclosure, which had some grave concerns. I was hoping that they would come up with something to avoid that, and it looks like they just have, and I'm very happy to hear about this. Just yesterday, I came across my desk and I read about a new policy regarding Fannie Mae and Freddie Mac loans, which encompasses probably over 90% of all loans that are out there. Now, those loans are not, when they're in forbearance and your forbearance period ends, you will not have to repay if it's one of those loans. You won't necessarily have to repay everything in a lump sum. They're simply going to take that money that you owe, the back money, and tack it on to the end of your loan period. That to me gives me a little more confidence, actually a lot more confidence in us being able to get through this pandemic without a housing market crash. If you are somebody who needs one of those forbearances, you should apply for it, tell your bank that you need it quickly. Because I also heard that they're not doing the period of time that the CARES Act required the banks to issue those forbearances is ending. The other thing though is if you don't need it, don't request it, because even though you don't have to make those payments in a lump sum, I'm still going to recommend that you don't do that to yourself. And the reason is, even though they say it doesn't affect your credit score, so your FICO score should not change by getting a forbearance. However, every lender that I've talked to has changed their underwriting policies. They are going to be looking for 12 months or maybe 24 months of solid on-time payment history in order to qualify you for financing. Those forbearance payments do not show up on your credit report as on-time payments. So even though your credit score might say you qualify, those who request a forbearance risk a very high probability that they may not be eligible for home financing for 2 years. The other thing is, I've been out there in the trenches. I've been showing houses. I've been selling houses. I can tell you firsthand, at least in my market, which is Cobb County, Georgia, I'm still running into bidding wars. I'm running into houses selling for above list price, selling in 1 day. The market is hot, and it hasn't gotten any less hot since the pandemic. There was a period of maybe 4 or 5 days in the beginning, kind of mid-March, when there was some question about it. And then the low interest rates and everything just got everybody back out in the market. And my phone is blown up with buyers that are willing and ready to buy. Total sales, okay? In April, the month of April of 2019, there was approximately just under $2.9 billion worth of real estate that sold in the month of April. This is all of Metro Atlanta, all price ranges. This year, 2.5 billion. So we're down, 4 million or so, but that's a few houses. That is, $4 million drop, very small drop in terms of the amount of volume going on. In terms of units sold, again, pretty close. In April of 2019, we sold 10,229 homes. In April of 2020, we sold 8,462 homes. So 1,500 fewer sales. That's down about 14% in terms of the number of sales. But here's the interesting part, new listings. In April of 2019, almost 16,000 homes came on the market that month, new listings. In April of 2020, we had less than 12,000. What that tells me is that there's fewer listings. You're looking at about 20% fewer homes on the market. That's 20% less inventory. Inventory levels were already pretty low in 2019, and there's 20% fewer homes on the market now. The number of sales are down slightly, but that's because there's not a lot of homes for buyers to pick from. If you're an investor or somebody who was kind of hoping that the real estate market would crash again, so you'd have another opportunity like 2009 to go out and buy up all the foreclosures and make a lot of money by buying low and selling high, well, unfortunately, you may not have that opportunity. It's looking like you won't. As we talked about, sales have been stable. There's no reason to believe that there's going to be a crash. The low interest rates are going to continue to bring people out. I've heard of 30-year fixed rates at under 3%, like 2.875. It's crazy. I mean, those kind of rates, the opportunity that buyers have to buy a home right now are incredible. The other thing I want people to be aware of is the dynamics of the market are totally different than they were in 2009. In 2009, leading up to that 2007, 2006 timeframe, what was happening is the banks were making irresponsible loans. People were going to the bank and getting a loan. If I had a $300,000 house, the bank would let me take a $400,000 loan using a $300,000 house as collateral, going to 125% loan to value on a home equity line of credit. People were borrowing money using their house as a cash machine to buy cars, start businesses, do all that kind of stuff. Well, guess what? Since 2009, banks have not gone to those levels. You haven't been able to get a home equity line for more than 80, maybe 85% loan to value max. Right now, 58.7% of all homes out there have at least 60% equity. That means almost 60% of the homes owe the bank less than 40% of what the home is currently worth. There's so much equity out there in people's homes that the banks haven't let people tap into, so they haven't. So foreclosures only happen when someone can't make their payments and the value of the home has dropped to a point where they can't sell it and pay off their loan. Well, in this market right now, with so many people having so much equity, values would have to fall by 60%, which is 2 to 3 times worse than happened in the worst bottom part of the 2009 crash. So it's just not going to happen. I don't see it happening, and it seems to me like with all the equity we have, the statistics so far showing how well the market's held up, and the fact that this forbearance thing has been put into place, which has helped people through this temporary tough time, I think we're looking great. This is an ever-changing thing. This week I'm optimistic. Next week, some new news could come out that could change my mind again. But I'm giving it to you play by play. Once again, this is Matthew Share, helping people get their fair share in real estate. If you like this video, go ahead and click subscribe. What are you waiting for? Share it with your friends and comment below. Let me know what you want me to talk about. I read all the comments and I will take your suggestions for topics, answer your questions. I publish a new video every Friday, so I hope to see you next week, and thanks again for watching.